Hi, everyone. I'm Flip Pideaux. Welcome back to Polymarket Insiders, your source for real-time coverage of the global information markets platform. Well, last month, the multi-billion-dollar DeFi protocol Iron Finance suddenly collapsed in what the team has been calling crypto's first large-scale bank run. Today, the crypto community is wondering whether the newly resurrected Iron Finance V2 will suffer a similar fate. Now, this is something you can trade on Polymarket right now, but the market is highly volatile and likely to resolve fairly soon, so your time is running short if you want to get in on this one. Our guest today made a killing in Polymarket's first Iron Finance market by predicting that collapse, and he's here today to tell you how to play the new market. Thanks again for joining us today on Polymarket Insiders, folks. Before we begin, please follow us, connect with us on Twitter, where we are at Old Bull TV, and our DMs are open. Apologies that we are not live today. Our producer is off, so if you can see more of the spit and baling wire than usual, our apologies. And of course, we won't be able to take your questions live, but you can, of course, engage with us on Twitter after the fact for any questions you might have for me or for today's guest, or recommendations for future coverage, nominations of future panelists, etc. With that out of the way, let's get to today's guest. It is Avi Eisenberg. It's his first appearance on Polymarket Insiders today, but we've been aiming to get him on the show for a while. And in this COVID era, he has got the rare, perhaps singular distinction of being someone that I've actually met in person first before he guested on the show at the Polymarket party in New York City a couple of weeks ago. So delighted to have him on air today. Avi, welcome, and thank you for joining us.
Thanks for having me.
Yeah, so set the stage for us a little bit. I'm going to put up on the screen the market that we're talking about on Poly today, but can you tell us exactly what this market is that we're trading, and what does it hinge on? What is the outcome that we're concerned about here?
So the basic answer is that you're tracking some metric called TVL, whether it's going to be over or under 500 million as of August 1st. To explain what that actually means, I have to do sort of a little intro to crypto and explain how some of this stuff works. So I'm going to start by explaining the Iron Finance, how the first version works, and that one blew up a few weeks ago. And they had a market on that one too that did pretty well.
That's this market here. Yeah. I'll just show the. Here you go. Shortly after it launched, you can see it went from near 50-50 to 0. So yeah, this was the first market of a month ago.
Yes. So their first version, they launched a crypto stablecoin, which means a coin that's supposed to be worth exactly $1. And then they had some kind of convoluted system where it was backed by roughly 75% of USDC, which is the coin that's actually worth $1, that has like institutional backing. And that's the same currency that's used for betting on Polymarket. And it was like 25% backed by their own token, which had no intrinsic value. So it was basically just a very complicated Ponzi where not everybody that's bought in would be able to get out at $1. So it was inevitable that once it ultimately collapsed, the token would only be worth about 75 cents. That was the actual real backing. But while it was running, you were able to effectively get return high yields on your money as long as it would continue working. So it was a Ponzi in the sense that people that got on early made money, and people that got on later lost money, depending on when exactly they got in and out. So this was very successful, and in the span of a few weeks, it grew its TVL to about 2 billion. A bit over 2 billion was the peak. And TVL here refers to it's a measure of how much money is in the protocol, which is how much people deposited, and how much coins were minted, so every time they mint one, it's supposed to be worth $1. So there was like 600 million iron minted at the peak. And then you add all those numbers together and you get the TVL, and then the website displayed it the Iron Finance website displayed it in one location. So then the market was basically directly on what TVL would be, but it's ultimately a proxy on whether the ecosystem would crash. And so the TVL basically went from 2 billion to, I think, a couple hundred million in a day when everyone withdrew their money and the whole thing crashed. And it made a bunch of headlines because the whole system going from billions to effectively zero in a day was pretty newsworthy.
Yeah, and it was obviously a very swift one. Here's an article from CoinDesk from the crash, token crash. Post-mortem Iron Finance says it suffered crypto's first large-scale bank run in the wake of the crash. Billionaire Mark Cuban calling for regulation of stablecoins. So you went kind of even further in your characterization here. You referred to this as more of a Ponzi scheme in the sense that early investors were able to do quite well, but ultimately the sort of fundamental backing of this supposedly stable coin that should have been $1 ultimately was about 75 cents. So once people kind of realized that the inevitable panic ensued, and if your characterization is right, is fair, then yeah, bank run is probably more of a euphemism here, right? In terms of fractional reserves, banking is more of a legitimate financial service. If it's a Ponzi scheme, then this is really something that I'm not even sure why there would be a V2, unless it's just an opportunity to give a bunch more early investors and the founding team an opportunity to make another quick buck at the expense of the later investors. So is there an ostensible, more legitimate business case here or innovation in the tech underlying the Iron Finance protocol? What is the idea here? Is there any legitimacy to this, or is this inevitably just a matter of time before it crashes again?
So the second version has more of a basis. It's not as blatantly a Ponzi, but the economics of it ultimately are the same. The way all these protocols work is they have a rewards token where basically you give them your money in the smart contract, and then they will issue a certain amount of reward with their own token, and then you can sell that. So if you put in dollars, you get a certain yield, and so that attracts a lot of people to put money in, and that's how they got so much TVL. That's how the new version, within a day, it had 1.5 billion locked in because they were giving out these rewards, which had value because other people were buying the reward token. People are trying to bet on it that it's going to go up. The problem with this is that they start out with a relatively small supply of the token, but then every single day they're just issuing constantly the reward. So if you look at the Iron Finance Farms page, between the different pools, they're giving away over 1 million units of their own rewards token, which is called ICE, a day. You can't actually see the numbers unless you have a wallet connected. But it's basically one pool has about 900,000 and two other pools has 200,000 is their called the rewards emissions per day. So you can see that the price right now is $1.80 something. When it launched, the price quickly zoomed up to like $36. And when it was there, if you were getting that as a reward, you would be making like a crazy amount of yield, something like 300, 400% annualized when I looked at it. Now the yield is down to something like 40%, which is still good, but it also is going to keep on going down. As they're issuing every 1 million new tokens a day, that just gets dumped on the market as people get them in rewards. And so inevitably that will crash. Now
here we're looking at we're not logged in on that other site, but here is this chart roughly that price history you're talking about, where it spiked into the 40s. Just what is this yesterday? No, day before yesterday.
Yeah.
And it's now down about $1.85.
Yeah, this launched 2 days ago, and you can see it was at time, and then it crashed, and now it's $1.80. So the way it works is, as this price of this token goes down, the rewards for having your money in the pool with it's the rewards for that 1.5 billion in funds goes down because they're getting paid in this token.
Mm-hmm.
So it went down from you were getting a 300% annualized, now you're getting something like 40% annualized. And as people get these rewards, they will automatically sell them because nobody wants to hold on to the token because there's no intrinsic value. So it's a very circular scheme where they attract money by giving away, by just creating money out of thin air. Mm-hmm. But that's just obviously unsustainable. The real question is how long something like this takes to crash. So if you click on the price in the upper right here, the one on the Iron Finance, click on the upper right on the price, on the 1.83 on the upper right, next to the connect button.
Right.
So, yeah. So it doesn't actually have the number because you're not connected. I guess you can edit this part out. So there's been like 2 days in, so the market, there's like 2 million or something of these tokens, and so the market cap was like 4 million. But then another 2 days, they're gonna have another 2 million of these tokens, and probably the market cap is not gonna go up 100%, so the price is gonna crash, and it's gonna go from 180 to $1.50, and every few days. So this market asked about the TVL on August 1st, so that's about 16 days from now. Over that time, there's going to be 16 million of these tokens minted. And if the price stayed the same, that would be something like $50 million created, which you need $50 million in new money to support effectively the price level. If that doesn't happen, these tokens always decline gradually. Effectively, you're going to have tens of millions of the ICE tokens dumped on the market. Now, once that happens, let's say the price goes down from 180 to 10 cents, then the yield on the money that's in the pool also crashes. And right. Instead of being 40%, it's going to be like 4%. And when it's at 4%, nobody is going to want to leave money in the air.
Yeah, that seems to be the same dynamic then, and would tend to set up a similarly swift collapse, right? As soon as and this is where the bank run dynamic, again, even though I think that term might be euphemistic here, but that dynamic is sort of what comes into play, right? Yeah. As soon as people realize that everyone's running for the exits, you don't want to be the last one holding the bag.
So that was true with the first version of Iron Finance, because as people exited, there would not be enough value to catch everyone out of the dollar for their own coin, their stable coin that was supposed to be $1. And so the people that were left at the end would only be able to get 75 cents out of their dollar. So you did have capped losses effectively. Here it's different because the pool is not denominated in a Iron Finance created token like the last one was. This one, when you're entering the pool, you're putting in actual stable coins that are fully backed, or depending on who you ask, you're basically depositing USDC, Tether, and DAI, and some allegations that Tether and USDC, and it might not be fully backed. In the crypto world, it's a big debate every so often.
But so then what? Go ahead.
It's generally considered fairly low risk to hold Tether for a short period of time. At least I consider it. Over the long term, who knows? There definitely is a lively debate about the viability of Tether.
Sure. But one way or another, it's a somewhat less self-cascading dynamic here than last time, I guess, right? And if you buy into the stable coin that it's denominated in, has a bit more.
The point is, you don't actually have a risk of loss. I mean, there's some risks. There could be like a hack, but there's no risk that everyone else will jump out and you won't be able to get your money back. So it doesn't work as a bank run in that sense. So it will not be the same kind of dramatic collapse from 2 billion to zero in a day that you got with Iron Finance version 1. But you will still see, as the price of the rewards token goes down, people will just have to pull their money because it will just stop making sense. And there's people that put in money at 100% APR, and it's going to be at 10%, and just not going to be interested. They're going to move on to the next farm, and because these stuff launch every day. You don't always have.
Well, and that's the thing. If there's no sort of innovative tech backing it, then what's to stop someone else from just cloning it a dozen times?
Yeah. Well, they
to someone who's going to get in late here, you can get in early on the next scheme. So yeah, what's sort of?
Yeah, they really just cloned other projects. I mean, it's been 3 weeks or something since the last collapse, and they didn't code new protocols from scratch. They just took another one. They tweaked a few parameters. They wrote up some plans, some documentation, whatever, and they launched.
So let's look at the market here again on Poly. The pricing here specifically over the last 24 hours, it's been obviously pretty volatile. It's gone from kind of mid to high 50s down to as low as 36, 35 even in the last hour or so, trading this Wednesday morning. Do you have a fair value estimate on this? It sounds like you're sort of bearish on this overall. But people can still, if they haven't been in this, can still short this at 35. How aggressively would you want to be on the no side here?
Well, I already accumulated a pretty large no position. So full disclosure on that. I think that certainly the TVL is going to start declining. The tricky part here is determining exactly how long that will be. I think August 1st gives a long enough timeline that it's hard to see it surviving till then, but there are some unknowns. Like if they launch new products, like they claim they're going to be launching, you can considerably see enough interest in their ecosystem that it's all a circle. People are interested in the rewards token because they're speculating on the product, and that makes the rewards token high enough for long enough so other people are willing to keep their money in to get those rewards.
And the TVL here now is currently 1.5 billion, or since we've been talking, it slipped a bit. It was 1.52, now 1.51. So this has got to go down another 2/3, right, by the end of the month to trigger the no side on Polymarket.
Yeah. One thing to note is that it basically reached 1.5 billion like the day of the launch, and then it's just been sort of hanging around there. Like at the current levels, nobody is really interested in putting more money in to make 40%, but it's not really 40% because it's not only going to last a few days. So, like if it was 40%, where it would last a year, it's a great return to get. But 40% annualized, when like there are sort of fixed costs going in and out, you pay 0.05% withdrawal fee, and then you have conversion costs. So it's not trivial to go in and out.
And what is this? There's a ticking clock here on the Iron Finance site here that we're looking at. Governance ready in now just under 23 hours. What happens in 23 hours? And can that be a catalyst for TVL or for the price in Polymarket one way or another, depending on what happens then?
I don't think so. Governance just means that people that hold the rewards token are able to, or I think they have a separate governance token here, are able to like sort of influence certain parameters or able to like vote on what the protocol will do.
Okay. For those who may be looking at this page at home too, again, we're pre-recording this episode. See this counter you may find that somewhat lower than we're seeing, but 23 hours, that's what 9 a.m. Eastern on Thursday is when that happens. In any event, it sounds like at 36, as you said, you've already established a fairly significant no position here, but would you be recommending folks that have not yet gotten in this to be getting on the no side here, watching for better entry price, or sort of keeping their powder dry and watching, the pace with which this TVL continues to erode? If I can find it again over here on this site.
I think that it's going to continues to go down. I think it's going to go down gradually up until there's probably going to be some kind of catalyst. One thing to note is that there was one whale that accounts for more than 50% of the pool here. They have, last I saw, they had about 800 million in the pool. And there was like sort of speculation on Twitter that this was an account from Sam Bankman-Fried from Alameda Research, because they're like the biggest crypto fund, and it's like the thing, run FTX, and they do a lot of this farming, and there was like some, I didn't really look at it myself, but there was like some sort of tangential ties from the wallet that had this 800 million in this pool to them. So I expect them to pull at some point fairly soon, because again, they're going to be monitoring this closely. They're going to be selling the tokens that they get in as rewards, and they're just not going to be happy to keep money in once the APR drops a bit more.
And so, what would you say is the best metric to be looking at here in terms of whether noting that the collapse has sort of started? I mean, we can look at the ICE price here, which again is now 183. When we started talking, it was around 185. The TVL here at 1.5 billion. When the floor starts to crumble underneath this, which number gets shaky first, do you think?
I think that the leading indicator is the ICE price. Well, because as it goes down, there's effectively they're paying people less to be in the pool, and so that's going to create less incentive, and some people are going to want to take their money out. If you see a pump, if like ICE goes to like $5 or more, then you could plausibly, the whole thing could last a little bit longer, because there's just more room for people to sell their tokens. Like I'm also looking at like how much, if you sell 1 million tokens, how much would it drop? I checked earlier today, and 1 million tokens would drop the price at 30 something percent. So that's sort of like baseline. If every token that's been created sold, it's probably not true. It's probably not every token that's created every day is sold. But if it was, you would expect about 30% drops.
Yeah, and interesting here we can see this is over the last about 8 or 9 hours. It's what's on screen now, sort of cascaded from just over 2 to actually as low as about 160 a few hours ago. Before it, then it did have this kind of gap up. Curious what your thoughts are on this. Just about 15 minutes ago, but about 9:45 Eastern this morning, jumped from 175, kind of right before we came on air here, to about 185. Is that just someone came in with a big buy?
Yeah,
volume spike.
It doesn't seem. I wouldn't look at these like relatively small 5-10% fluctuations as significant. It really matters is how this affects the APR of the people that are in the pool. And right now it's hovering about 40%. And at 40%, if it can actually stay there, then I think a lot of the pool will stay there. But the problem is they're all going to be dumping their tokens to the rewards tokens. So it's going to keep going down. And if this goes down another 50%, and then that 40% goes, APR goes to 20%, and that's already very marginal. And it's going to keep going down as more tokens keep getting dumped. What they need is sort of sustained interest in people buying and holding this ICE rewards token. And I don't really see that, but it is crypto. Anything can happen. If they get some kind of pump, if they start if people think that this is going to go up a lot, it's like it's all a game of what people think other people will do. People think that other people will pay a lot for this, and they can buy to speculate. I don't think you'll get the kind of pump that you'd need, because you need something like 50 million to pay out the people that are getting the yield over the next few weeks. And that's just to keep the current price. If the price goes up, then you need even more from that, of course. the price doubles, and
Right.
you need something like 100 million to sustain that. And that's not money that's getting a yield. That's just 100 million in new money coming in to buy this token from the people that are going to be dumping it. There's just this huge organic pressure to sell this token because they're just creating a million of them every day, and there's just not really anything to counteract that at the scale that I think it needs.
Yeah,
I mean,
it certainly sounds like it's setting up. Oh, we've just got an error here and trying to reload the price, but it does sound like a similar dynamic is setting up, even if it's a slower motion crash. You don't need this necessarily to crash as swiftly as the first one to still have the no side pay out, because you do have until August 1st for this to get below 100 million. And given the history with the first crash, it doesn't seem to be too confidence inspiring. Again, if there's no legitimately new or innovative protocols behind it compared with the first iteration, then what's going to give the market that confidence for that incremental $50-100 million in new capital to come in to sort of keep this thing alive? So that seems to be the bear case. Is there any more kind of credible devil's advocate bullish case you would entertain here, other than there's sort of a successful pump and become self-sustaining? Those Ponzi dynamics can be self-sustaining for a while. Is that the upside risk to this that you envision, or is there another way that this can sort of turn around and legitimize itself that would sort of kibosh the bear case in this one?
Well, the other part is, like I mentioned, there's one big whale with 800 million in the pool. If they just decide, I'm just going to keep my money in for another month, I don't care what I'm making, maybe it'll go up, so I'm happy to keep my money there. When there's one actor that could just do that, then I don't think that's likely. I think that the yields are going to go down, and they're going to say, okay, I have something better to do with my cash than keep it here. I have something that makes 5% or 10%. But it's always a risk when you have one actor that can control.
Sure. And if Alameda or whoever that whale is does decide to cash out again, that would be something that we would first see in the ICE price or in the TVL?
That you would see in the TVL. I don't know if they would do it all at once or gradually. If they did it all at once, you would just go from 1.5 to 700 or 800. But they could do it gradually, pull out 100 million at a time. The other thing is that as the TVL grows, it actually makes as the TVL drops, it makes the APR go up a bit, because effectively there's a fixed amount of rewards distributed among everyone in the pool. So, like I said, the current APR is about 40%. If the TVL went to 500 million today without the price of the ICE token changing at all, then the APR would just triple. So there's a little bit more leeway for it to go. Then it would be at 120%. And then presumably people would be happy to keep their money in the air. So you do need the crash needs to be sort of 3 times as much as the sustainable APR level. That makes sense.
Yep, makes sense.
Ponzi can be a bit confusing.
Yeah, no, for sure. It seems confusing, and of course, with the with Ponzi type arrangements, confusing is sometimes a feature rather than a bug, because it keeps the fact that there's no underlying value, or the underlying value is less than the money being put in to sustain it. It sort of obscures that, at least for a time, long enough for the early investors to make their nut and to screw over the later investors. But we will certainly be keeping a close eye on this, and would obviously encourage traders to follow along with Avi's analysis on this, given how on the money he was in the first iteration. And for those, it may be coming through quite small on your screen, but those 2 pages we were flipping back and forth between, this app.iron.finance shows you the current TVL. And of course, you can find the ICE price on various sites. This is polygon.poocoin.app/tokens, and then big long suffix to bring up the Iron Finance ICE over USDC price, which we'll give one final check here before we move on, is currently 1.7552. So obviously volatile, but that's a relative term when we're talking about crypto coins. As Avi mentioned, you don't necessarily need to get too upset or excited about 5 to 10% moves. He's more looking for, does this thing pop several fold back to say $5, or does it start cratering from here? I should say, does it continue cratering? Obviously coming down from 30 to $2 is obviously a fair cratering already in the day or so that it's existed. So let's leave that for now. Obviously, we would encourage folks to follow Avi on Twitter, follow us, where we'll be following his analysis. But can you give folks your Twitter handle or any other coordinates where they can sort of, keep current with your latest thinking on this protocol and on the Polymarket market?
So I don't really post about markets on Twitter. And you can follow me. I'd love a follow, but I just don't really do that. My handle is Avi underline Eisen, EISEN.
Sure, I will. I'll pop that on screen real quick here too, just so people can see it. And again, if you're in the various discords and other forums among the Polymarket, prediction market, crypto communities, you're probably familiar with Avi there. Would that be more the venue that people should be focusing on to try and keep up with your latest thinking on this one?
Yeah, I'm pretty active on the Discord.
All right, we'll find Avi there. Before we let you go, any other markets on Poly or elsewhere that you want to weigh in on, or that are sort of occupying your mental focus and bandwidth these days?
Yeah, there was this really interesting market that's been open for a couple of days, but then really just went crazy yesterday. You have the EIP market for August. Can you pull that one up?
Yeah, let me see if I can get that one. One second. Here we are. This is the August one. Let me share this. There we are. You see this has a big flip just in the last day or so. So what's going on here? What's this all about? What's EIP 1559, first of all, and then what's going on with this price lately?
So there's this big Ethereum upgrade that's gonna do all kinds of random stuff, like change how fees are, how transaction fees are work, and I'm not doing it justice here, but it's complicated. And there's another market on whether it was launched by July 31st, and that one is basically trading at zero now because they trading at 1 cent, I guess, because they announced the block number that it would launch on, which is like 12,965,000, I think. And so basically there's a block on Ethereum blockchain about every 13 seconds. So if you have the block number, you can sort of estimate when the block is going to be if you're in the future. But there's like some kind of variance. So it's hard to be actually like exact. So when they announced that they're going to launch, they said it's going to be August 4th, between I think 13 to 17 UTC, which would have been comfortably before the relative time here, which is August 5th. And so when this market launched, if you look like 7 days, what was the price at launch? It was very heavily yes, right?
Yeah, it looks like it was around 83 a week ago.
And then it's like just in the last day it flipped. Like even a day ago, it was still majority for yes. And the other interesting thing is that Polymarket added a ton of liquidity. If you look at it, it has $154,000 in liquidity, which is a measure of how much you can buy and sell without moving the price too much.
Right.
And I think this is actually the most liquid market on the site right now, which is just really interesting. And obviously the fact that it moved so much in the last day. there's a couple of different sites that people are posting in Discord that are trying to like estimate when it's going to happen. And so like other scans for some time were saying it would happen a little bit before midnight, and sometimes we're saying it would happen a little bit after midnight. And this is at a time in the market is midnight. So on August 5th.
Midnight Eastern on
Yeah.
on August 5th, is that right? Or midnight Eastern going into August 5th, right? 4th into the 5th.
Yeah.
And so as you said before, this seemed to be relatively easily calculable to be earlier on the 4th up through about, 15 hours ago, 20 hours ago. What changed in that calculation? Just the average block time on the chain? What was it that's because it's not like the odds are wavering. We've totally flipped from 80% yes to 80% no.
What happened is there's one guy basically who just came in and bought 200,000 shares of no, and they like every so often they just come in on this huge market and they'll just do these massive trades. So they have like markets they've lost 50 grand on, and they have markets that they won 50 grand on.
Mm-hmm.
And I'm not gonna. It's not the entire. They're not responsible for the entire move, but I think they were the ones that first flipped it, I believe. And then they bought it from like they moved it to like 25 cents for yes and 75 cents for no, and then it moved a little bit more, and some of it moved back. People were buying. But there's just been, they are definitely the biggest no holder at this point.
Is that a known person or speculated what the identity of that big whale that came and flipped this market is?
They were sort of active in the Discord. I mean, I don't want to specifically say any names, but if you're in the Discord, you can
you can find it without too much effort in the Discord. Do they have do they have a reasonable hypothesis, justification here for why no should be favored when the market until now has been pretty convinced about yes?
From my understanding, they did some kind of sort of analysis of like the last month or of the average block time. But the interesting thing is, if you look into it, different months have different, or not. It's just over time that the average can sort of fluctuate from like 13 seconds, 13.2, 13.4. Mm-hmm. So it's, and then if you calculate how much time, like you can just look at the number of blocks and figure out what the exact average block time that's needed in order to hit the target. It's a pure numbers game. You're just predicting is it going to be before or after this deadline. We already know the block is launching on. There's very little chance of that getting delayed. I mean, there's some chance it gets delayed, but very negligible. Like if it was just the chance of the block was getting delayed, it would be at 95 or more, that it would not get delayed.
So are you persuaded by the analysis that, well, I guess either that 80 cent yes was overvalued, or that no is so likely that's the better play now? I mean, do you have a thesis on this one, or is this simply a dramatic one to watch and try and puzzle out?
I have some thoughts on this, and I've taken a position, but I do not want to really discuss it or pump any side in particular at this point. It's still very, very liquid, and I think that it's going to be pretty interesting to watch over the next week or two, while the market is sort of still in flux. And I do think after about a week or two, it's going to become clear which side is correct, because there's a lot of variance, because like I looked at the number of blocks per hour, and like it sort of varies. The market, in order for it to be before midnight, you need something like 269 blocks per hour. But then you have some hours where it's like 250, and some hours where it's like 320. So it's because the number of blocks is basically random. People are mining these blocks, and then it depends on if the miners get on average lucky or less lucky in terms of how fast they're finding each block.
Is this the kind of thing where insiders that control a lot of mining capacity could either have better insight into or be able to influence In other words, bringing online or taking offline temporarily a significant amount of mining capacity. I don't know if the dollars at stake here on Poly are worth doing that, but is that the kind of thing where even if it wouldn't be financially profitable to influence it, to put something online or offline, to shift major amounts of mining capacity, could insiders simply be aware of, oh, this is actually going to, the market expectations of that capacity and therefore of the average block time are inaccurate? Or does that even come into play? Does that average capacity or other, changeable parameters by insiders impact that average block time and therefore the time that this magical block will, be mined?
So the interesting thing is that the hash power doesn't actually affect the block time directly. The way it works is as hash power goes up, the required amount of hash power that's needed is adjusted automatically to hit a target block time. Like the target is something like 12 seconds, but then there's sort of stuff that, like in practice, happens that doesn't actually get you to 12, so it's closer to 13, a bit over 13. But that automatically gets adjusted. So if the hash power doubles, there would be like a couple of minutes or whatever of really fast blocks, and then the network would automatically adjust. They would see, oh, you had way too many blocks in this time period, so we're going to make it harder to make a block. And it's sort of automatic. There's a really neat formula for it. So it could influence over the short term, but like it would just need to be really massive changes, like where you just like triple network capacity, or where like you take half the network capacity offline, and then you keep on doing that and you add it back. Like it would be like really broad scale manipulation. It would be super obvious. I don't think there's really it would like cost millions just in like forgoed profit, because like every block gives you something like 2S in reward, I think. So that's like thousands of dollars, and it's every 13 seconds. So if you're messing with that, it just doesn't make sense. And right. And there's not really all the information that's needed to sort of project this out is public. It's not like there's no like inside info on how long the blocks are going to take.
Yeah,
like it's a $1 billion ecosystem, multi-billion dollar ecosystem. Nobody has information on. It's just whenever the randomness in the block generation algorithm happens.
Yeah, makes sense. Well, this is obviously one, as you mentioned, one of the highest, maybe the highest liquidity markets on the site. So, anytime you see that much liquidity and this big a price swing, it's obviously one to pay attention to, because this is not just a fat-fingered trade or an illiquid market that's swinging on one committed trader. This is a big flip from 80-20 to 20-80 in the course of a day, and something with that much liquidity. So if you're able to sort of crunch these numbers, come up with the thesis you believe in terms of whether this is going to be before or after midnight on August 4th going into August 5th, there could be a large pile of money to be made here. So yeah, I have no thesis or really even understanding beyond a total uninformed layman on how this works or what's likely here. But folks, if they want to join the Discord, follow along, that might be where you would find some more reasoned, informed, or possibly poorly informed, irrational, flame-throwing, kind of bad faith argumentation on this too. You kind of get both sides, but with that caveat in mind, that may be where you find folks at least sort of actively discussing this. And if you can, sift the wheat from the chaff, that might be where you get a little bit of a better signal. Anywhere else that you would obviously suggest that people, begin in trying to figure out an edge on this market, or
well, one thing I was going to say is that within a week or two, I think it's going to be much more clear, because there's just less time for variance. So like if the required block time, or like I was looking at blocks per hour, other people are doing block time. It's like there's a couple of different metrics you can look at that are all related, but like they like different actual calculations. So like if the required block time is like 269 blocks per hour right now, and if that starts going up, that means that we're producing blocks too slowly. If the required number goes up, which you can sort of calculate that by looking at what the current block is and what that block is and how much time there is between the deadline, and just divide that by the number of hours. which is very easy. You can get the latest block counts from Etherscan, and so you can sort of monitor what the required block number per hour is, and what the current rate is. It's a bit tricky. You can just track a bunch of different metrics and look at that. And then if that starts going up, that means that it's getting hard. That means that the current rate is not sufficient. If it starts going down, it means that where it's getting easier to hit that. So there's just going to be less variance with less days. It's also possible that it gets very close, and if it starts narrowing down to the half-hour window before and after that time, then the market, you could see the market go to 50-50.
Right.
If it starts sort of narrowing in on a few hours after, then the market can go to 1, and if it starts narrowing in on a few hours earlier, then the market will go to 0.
Yeah. Well, fascinating one to watch. Obviously, one where some large trader feels that he's got better information than the market on the whole. So I will not be wading into this one myself, at least not now. But certainly we'll keep a tab open and be watching this one. It should be a dramatic one, as should be the Iron Finance one. Really appreciate your insights on that, especially given that you're able to so deftly crack the first market, and we'll be keeping an eye on that. And in fact, before we go, I would just want to reshare the screen here, give folks an updated. Again, this is going to already be outdated by the time you're watching this, but just for our own sake, let's see. The latest price is still around 36, so that's not too much change in terms of whether they will stay above 500 million on August 1st. And let's go over to the ICE coin price. I imagine not much change there. Indeed, not much change, and the TVL. Still kind of hovering right above that 1.5 billion. But I think these are kind of the metrics to watch. Follow Avi and the rest of those kind of covering this market on Discord, Twitter, wherever else. But Avi, want to thank you again for joining us. Please come back and join us again when one or more of these markets totally blows up in the coming days, or anything else sort of crosses your radar that would be worth our viewers and listeners hearing about. But Avi, this has been really informative. I want to thank you again for giving so much of your time to us today and helping us understand what are very dramatic, and yet for those that aren't steeped in this stuff, very complicated underlying events. So appreciate your time, and thanks for being with us.
Thank you.
And thank you all viewers at home for watching. Again, you can engage with us on Twitter at Old Bull TV. Happy trading, and we will see you next time.